Despite a dramatic Gift Nifty plunge, FIIs are pumping in cash. What does this mean for today's market? Welcome to Trade Vision Pre-Market Report. Good morning, traders. Welcome to Trade Vision Pre-Market Report. Today, 2026, July 22nd, Wednesday, marks another vibrant, promising day to seize opportunities. Let us deep dive into the detailed reports. The Trump administration has unveiled new tariffs on Canadian goods, including autos and dairy, even as US and Mexican negotiators proceed with USMCA discussions. This escalation in North American trade friction could weigh on global trade sentiment, potentially increasing volatility for Indian export-oriented sectors, and puts the spotlight on companies with significant international supply chain exposures. Asian equities staged a solid rebound, with the MSCI Asia Pacific Index climbing 1.7%, propelled primarily by semiconductor companies. Concurrently, Brent crude prices eased below $89 a barrel, helping to temper broader inflation concerns. This combination lends support to overall market sentiment for Indian equities, with IT and oil-sensitive sectors likely finding immediate relief and drawing investor attention. The European Commission has launched its Digital Product Passport Registry, a new regulation designed to boost sustainability and transparency for products entering the EU market. This initiative mandates digital identity cards for certain goods, implying new compliance requirements for Indian exporters, but also securing continued market access for compliant businesses in sectors like textiles and electronics. The Reserve Bank of India has unveiled draft norms to consolidate and streamline foreign investment into Indian equity instruments, proposing a unified code that will supersede existing regulations. This move, clarifying eligible entities and retaining direct versus portfolio distinctions, could lend significant support to FPI inflows by enhancing regulatory clarity and ease of access, putting the spotlight on financial services and large-cap stocks that frequently attract overseas capital. India's core sector output surged by 5% year-on-year in June, marking a 5-month high driven primarily by robust growth in iron ore, cement, and electricity production. This acceleration from May's 3.2% expansion suggests underlying economic resilience, which may lend support to infrastructure and industrial stocks, leaving room for continued capacity expansion and demand growth in related sectors. The Securities and Exchange Board of India has imposed a 1 crore rupee penalty on Central Depository Services, India, Limited, CDSL, for cybersecurity and operational lapses following a malware attack. This regulatory action, highlighting deficiencies in securing critical systems, could weigh on sentiment for financial market infrastructure providers and places the spotlight on stringent cyber risk management across the broader financial services landscape. Escalating Middle East tensions have forced 2 oil tankers carrying Saudi crude to Asia to reroute from the Red Sea after Houthi threats, while US and Iranian forces continued strikes. This deepening conflict, alongside the effective closure of the Strait of Hormuz, is driving crude prices higher, potentially increasing India's import bill and inflationary pressures, putting the spotlight on energy and logistics stocks. The Panama Canal Authority is curtailing vessel booking slots due to water supply challenges exacerbated by potential El Niño weather. This new restriction, coupled with existing Red Sea disruptions, creates further bottlenecks in global trade routes, potentially increasing shipping costs for Indian importers and exporters, leaving room for margin pressures in trade-dependent sectors. Sun Pharmaceutical Industries has completed its $11.75 billion acquisition of Organon & Co., marking India's largest outbound healthcare deal this quarter. This strategic move significantly broadens Sun Pharma's global specialty pharmaceutical portfolio, particularly in women's healthcare, and could lend support to the pharmaceutical sector on Dalal Street today, putting a spotlight on other major Indian pharma players for potential global expansion. SBI Funds Management made its debut on the bourses yesterday, listing at Rs 574 per share after being oversubscribed 42 times. Despite strong demand, the listing was muted, settling slightly below its opening price. This performance leaves room for cautious sentiment around upcoming financial sector IPOs, particularly within asset management.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now. Like and share this video. Comment your love and share your happiness. Let's win together!
Foreign investors bought a net 1,650.16 crore rupees in Indian equities today. Domestic institutions, however, were net sellers of 656.88 crore rupees. This mixed picture suggests foreign buying will likely drive a moderately positive market close. If we look at yesterday's sectoral data, we see a clear rotation into Nifty Auto, up 0.93% yesterday, with robust 2.39% weekly momentum, and Nifty Realty gaining 1.07% yesterday, with 1.33% weekly momentum. Conversely, money is flowing out of Nifty Fin Service and Nifty Pivot Bank, both showing negative weekly momentum, signaling a tactical shift for traders. Global markets were mixed but mostly positive. Asia saw strong gains in Korea and Japan, while Europe closed higher across the board. However, a significant drop in Gift Nifty casts a shadow, signaling extreme caution for Indian traders today. Now let's move on to some stocks highlighted in today's news updates. Dr. Reddy's Laboratories is in focus ahead of its first quarter earnings announcement today. Interglobe Aviation, known as Indigo, is buzzing after securing a massive order for over 1,000 LEAP aircraft engines, the largest of its kind. Engineering giant Larsen & Toubro recently clinched multiple large orders valued between 10,000 crore and 15,000 crore rupees from domestic metals and mining firms. Tatva Chintan Pharma Chem reported a strong first quarter earnings beat, exceeding revenue and EPS estimates by more than 10%, leading to analyst forecast reviews. Looking at the RAS levels for today's Nifty, we see a crucial breakout level at 24210 and a breakdown level at 24190. Should the market turn bullish, resistances to watch are 24281, 24352 and 244422. Conversely, a bearish turn would see supports at 24120, 24049 and 23979. Today's CPR is extremely narrow at just 8 points, with the top at 24199. Pivot at 24195 and bottom at 24191, signaling a potential high momentum or breakout day. Analyzing the options matrix and derivative distribution. The Nifty's put-call ratio has acutely deteriorated from 1.351 on 2026 July 20 to 0.884 on 2026 July 21. Indicative of aggressive call writing and put unwinding dynamics. This shift firmly anchors the 2026 July 28 expiry max pain at 24,200. With 24,200 now serving as both the major call and put open interest concentration wall, institutional positioning suggests a pronounced bearish bias, with 24,200 acting as critical resistance, while tactical support is observed between 23,000 and 24,200. India VIX is currently at 12.60, falling by a 2.93% from its previous close of 12.98. This indicates falling volatility, which is generally positive for Nifty, especially with a mixed 5-day trend. The CPR is narrow today, which typically means a trending day with a stronger directional move is likely for Nifty. Gift Nifty opened at 24,126, creating a significant gap down of 217,569 points compared to Nifty's previous close of 241,695. This suggests Nifty will likely open with a gap down, indicating a potentially bearish start to today's session. The no-trade sideways zone is set between 24,190 and 24,210. A move above the breakout level of 24,210 could yield 138 points, reaching 24,348. Conversely, a move below the breakdown level of 24,190 could yield 163 points, reaching 24,027. Previous trading day, Nifty moved minus 28 points, which was a bearish move. The weekly move stands at minus 2 points, while the monthly move is 290 points. The close did not sit tight against either extreme, so there is no strong directional carryover signal into today's session. Time now for our final verdict on today's session. Despite a significant gap down in Gift Nifty and most benchmark indices closing lower yesterday, the Indian market outlook leans cautiously bullish for today. Nifty futures saw a short buildup, but the index closed slightly above the futures price, hinting at resilience. Foreign institutional investors injected a robust 1,650 crore rupees, significantly overshadowing domestic selling, which is a strong positive. The India VIX, a key fear gauge, has fallen by nearly 3%, indicating reduced market apprehension. Sectorally, Nifty, Realty and Nifty Auto led the gains, up by over 1% and nearly 1% respectively. While global markets present a mixed picture with some strong gains, the dramatic plunge in Gift Nifty demands extreme caution at the open. Furthermore, a majority of Nifty 50 stocks advanced yesterday, signaling underlying strength. However, the technical indicators for Nifty and Sensex remain bearish, with both trading below their 200-day exponential moving averages. Options data also points to a bearish directional bias, with strong call resistance at 24,200. Weighing these signals together, we anticipate a session with initial volatility, but a potential for a positive bias, provided key support levels hold. And that wraps up today's Trade Vision pre-market report. Don't miss a beat. Hit subscribe and ring that bell for daily updates. If you found our insights valuable, please like and share this video with your network. We thrive on your feedback, so share your thoughts and advice in the comments below. May your trading day be incredibly prosperous.